What's everybody doing? I hope so far so good. This is Harry. Today we're going to talk about accounting. You already know in this channel we are learning. We've been teaching you about Excel, stock market, credit, so how to fix your credit, and also about accounting. So everything that you need to know to educate yourself, you're going to get it under this channel. So that's why you can do me a favor to subscribe, like, and share to your friends. So anything that you need to know, you're going to learn it today in this channel. So we're going to talk about accounting. Accounting is very simple. You just do two things in accounting. As I've been told you before, you do what you record and you report things. That's simple. Report and record. So whatever that you receive from your boss, from your business, and whatever you've been doing, you report it and you record it. That's all we've been doing in accounting. Whatever you see has been complicated, that's all you've been doing. You record and you do what you call record and report. And also the rules of accounting, they have two rules that you call it. The two rules called debit and credit. So in other words, in accounting, everything is recording in a T account, what you call a ledger. So when we record things, because remember I told you, you report and record. So whenever you report it on what you call ledger. This is what you call ledger. It's line, you call it ledger. So whenever you report cash, income, expenses, whatever you be recording, you record it on what you call, you create what you call a ledger. So you create a ledger for everything. That's all in accounting. And the rules is, we have two rules, what you call debit and credit. Two things for accounting, you report and you record. And the rules are debit and credit. As soon as you can know those two things, you'll be good. What you're doing in accounting, you record, you report. That's all you've been doing. You report and you record. You report and you record. And there are tools, debit and credit. And whenever you report things or you record them, you record them on what you call T account or ledger. You can call it T account or you do ledger. Most people call it ledger. So you create a ledger for everything that you need to be recorded. If you want to record your cash, you create a ledger. You want to report income, you create a ledger for it. You want to record expenses, you create a ledger and you put debit and credit. Debit and credit are the rules for the account. I'm going to give you an example. For instance, let's go down there. For instance, we're going to see how that works. Let's say that we start the day, for instance, or cash record for today, for instance. It says today we just start the day. And then let's say that we start the day with $0. And we receive $6,000 cash from a client. For instance, you have your business, you open your business for the day with $0. And we receive $6,000 cash from a client. And also we paid $1,000 to somebody, or we buy something. Let's say we buy for $1,000. From that $6,000, we buy $1,000. Thereafter, we receive another $4,000 from somebody or from the business. We sell something, cash. And also another $1,000 cash from our client, where we paid $3,000 cash. We're going to see how that works. Very simple. Because remember, I've been told you, you report things, you record them. Now we're going to record them so we can report to them. That's all we're going to do. So how are you going to report those cash, or those cash that we get there? It's a cash. You're going to report it to the ledger. We call that ledger. And then what you're going to do, we're going to put it in the rules. Those rules are debit and credit. So we call it ledger. Let's say, let me just see if I can write something for you. Remember, we call that this one ledger. We call it ledger. Remember that? Ledgers. Ledger, we call it. And what we do, tools, debit, and credit. And we call it cash. Remember, anything that you receive, whether it's cash, income, expensive, you create a ledger for it. So that's why we create a ledger for those cash we've been receiving from them. And then those rules are debit and credit. Remember, in debit, anytime you receive money, I'm going to tell you first before we do this problem. Anytime you receive money, you put it in debit side. That's the rules. Receiving money, you add it to the debit side. Money go out, it goes to the credit side. That's the rules. You got, as soon as you can manage those tools very well, will be good for your accounting. You receive money, you add it to the debit side, and whenever money go out, it go to the credit side. I just said this one is in, money coming in is for debit side. Money goes out, whether you buy or you sell something, it go to the credit. Or money goes out, it goes to the credit side. Out for credit, in for debit. That's the rule. As soon as you can make it different between debit and credit, you'll be okay. Now, let's go to that problem. Let's see how you can do that. Remember, you say receiving, go to the debit side, and out, go to the credit side. You're going to see how simple is it. Okay, we said we start the day with $0. So what you're going to do, you're going to put the 0 in the debit side. Start the day with $0 or so, and we receive $6,000 cash to start after we start the day. Thereafter, we receive $6,000. Where are you going to put the 6,000? Because we receive money. Remember, I told you, whenever you receive money, you add it to the debit side. So you're going to add $6,000 there. That's the way accounting works. Simple as it is. As soon as you can manage your debit and credit side, you'll be good in accounting. $6,000 you receive from a client. And we paid $1,000. From the $6,000, we paid out $1,000. So what's going to happen? Because remember, whenever you paid something, money goes out. Where you put it in the credit side. So now you're going to add $1,000 to that side here, which is credit side. As simple it is. Thereafter, we receive another $4,000 cash from a client. So we receive now. Remember, anytime you receive, it goes to the debit side. You're gonna add $4,000 there now. You don't put it there because we receive, you collect money, you get money coming in, So you put $4,000 there. Simple as it is. So we receive $4,000 from the business and another $1,000 cash. That's mean NA. We see another $1,000. So we receive again. So what you're going to do, you're going to add it to that side here. $1,000. That's the way. From our client. So we receive $1,000 from our client. But we paid another $3,000 cash, whatever we buy or we sell out, we give it to somebody. We paid $3,000 cash. Whenever you paid, that means you paid out. Where you're going to add it now? You're going to add it to that side, which is credit side. $3,000. That's the way accounting works. You have to be able to make a difference between these rules, those tools. We call that rules. Let's say we call it rules. Those are the rules that you need to know in accounting, rules. the rules you need to know in accounting. That's all you need to know in accounting. Let me just put it for you better here. Rules. As soon as you can know the rules, which is debit and credit. Remember, in accounting, we have two things. You do two things in accounting. You do report and record. So now, where you report them or where you record them on ledger. So how you do your ledger? You create a ledger for everything, whether it's cash, income, expenses, liabilities, whatever you have to record, you create a ledger. And on that ledgers, you have those tools, which is debit and credit. And also, what happened in debit and credit, whenever you receive money, you receive a car, you receive something. For instance, you receive cars. It's not only money. For instance, someone gives you a car, you put it in debit side. Someone gives you a house, whatever you're going to report on your accounting house, you put it in debit side. Someone give you clothes. Let's say someone gives you clothes for the business. You have a goodwill, something like that. We put it on the debit side. Someone give you shoes. It's not only money. Someone give you shoes. You put it in debit side. Now, when you sell this car or you give your car, the car that someone already been gave it to you, and now you give it back to somebody else, you put it in credit side because you give this car away. You put it in debit, in credit side. The house, you give it to somebody. You switch it to the credit side because you give that house out. Sell it. Clothes, someone give it to you. When you receive clothes, you put it in debit side. Now, if you give it back to your friends, when you do accounting for it, you put the clothes back here to the credit side. Shoes, you got 5 shoes. Someone give you 5 shoes, and you have to give 1 shoes to somebody. You add this 1 shoes to the credit side, and you got 4 there. That's all. Now, how are you going to calculate this? The money, the numbers. What you're going to do, you add them here. You do 6 plus 4, that's 10. 10 plus 1 give you 11. You have to do a closing balance. So you got $11,000 cash that you've been receiving. So you receive $11,000 cash when you add those things. And then you have to do the same thing for the credit side. You add the $1,000 that you give out and the $3,000 you give out, that's mean $4,000. You have to do the balance. You have to calculate total balance for each side, for the debit side and for the credit side. So you have $4,000 that you give away out, and you got $11,000 that you received. And then now you're gonna do the closing for the total. We call that closing date, closing total. So you do 11 minus 4, that's 7,000 left. So we call it closing date. Let me put it there for you. Closing. Let me just put it down. You have a closing balance. You got a closing balance. Closing balance. Let me just do it. A closing balance for $7,000 left. You see, 7,000. That's the way, my friend. I don't have enough space, but I just put it there for you. So you got $7,000 into that. So remember, $11,000 from the cash, $11,000 that from the cash that you receive in total, minus the $4,000 that you give away, you got $7,000 as a closing balance. That's the way. And then you keep doing that until you feel. But there are more stuff. deeper that you need to know. But the simple thing, the main keys, you record, you report, and those tools are debit and credit. As soon as you know where to put money, thing that you receive, whenever you receive thing, you add it to the debit side. And whenever you give thing away, you sell thing, you put it outside, and then you do your closing balance. So my friend, if you like this video, just do me a favor. Just subscribe, like, and share. So therefore, anytime I got good stuff for you, you'll be notified. If you like the channel, share, like, and subscribe. Thank you for your time. And then we see you next time. It's Harry. Bye-bye. See you.